Welcome back to the channel. Today we're taking a calm, structured, and realistic look at Zcash price action because what's happening right now is a perfect example of how markets often behave in ways that confuse the majority of participants. On the surface, Zcash looked like it should have dumped hard from resistance. That was the expectation. That was the logical outcome based on structure. Instead, price briefly broke out, pulled traders in, and only now is starting to roll over from a higher level. This type of behavior is not random. It's how markets create uncertainty, force emotional decisions, and punish people who react instead of reading structure. This video is for educational and informational purposes only and is not intended as financial, investment, or trading advice. Earlier, Zcash was positioned in a zone where rejection made sense. It should have dumped from there, but it didn't. Instead, it pushed higher before losing momentum. In my previous analysis, I outlined two primary rejection areas, one around $488 and another higher resistance near $540. What's important here is that price never even managed to reach the first major resistance. Instead, it topped out closer to $476 and immediately started pulling back. That failure matters. When price cannot even test a key resistance level, it often signals underlying weakness rather than strength. What we are seeing now is not a clean bullish continuation or a clean reversal, but a transition phase where momentum is shifting and structure is being tested. This is where the percent trend exhaustion becomes critical. When you look at this indicator, you can see that it is already working its way down toward historically oversold levels. The last time it was positioned this low, Zcash was trading around $337. That is not a random number. Markets frequently revisit areas where momentum previously reset. From a probabilistic standpoint, it is entirely reasonable to consider that price could move back toward that region or even lower if the current structure continues to weaken. What matters most is how the short-term and long-term trends interact. If the percent trend exhaustion crosses lower while the short-term trend is dumping and the long-term trend also turns down, that combination historically leads to extended downside moves. That is the scenario that creates deeper corrections, not just shallow pullbacks. However, markets rarely move in straight lines, and this indicator does not collapse all at once. It works its way down gradually. The long-term trend often drifts lower while the short-term trend cycles up and down, repeatedly intersecting before any real resolution occurs. If the long-term trend flattens instead of collapsing, then when the short-term trend rebounds, the two can intersect again, leading to another push lower before eventually setting up a larger breakout. This pattern happens repeatedly across markets, and it's why corrections often feel messy, slow, and confusing before they resolve. Right now, the behavior of this indicator suggests that momentum is still resetting rather than expanding. When you combine that with momentum tools like the MACD, the picture becomes clearer. The MACD is pulling back, signaling that selling pressure is building rather than fading. This is not about one indicator flashing bearish. It's about multiple tools aligning. Failed resistance, weakening momentum, and trend exhaustion drifting lower all point to increased downside risk. That does not mean price must collapse immediately. But it does mean that the probability favors continuation of the pullback rather than an immediate move higher. On the 4-hour chart, structure confirms this caution. Price is beginning to form lower highs and lower lows, which is the textbook definition of a bearish trend. As long as that structure remains intact, bullish arguments remain weak. One of the most important levels to watch here is around $393. If price breaks and holds below that support, it confirms that the market has not yet transitioned into a bullish structure. A true bullish trend requires higher highs and higher lows. Without that, any bounce remains corrective rather than impulsive. There was a moment where it looked like Zcash might be establishing higher highs and higher lows, but if price rolls over from this region, that structure will be invalidated and replaced by another lower high. It's also critical to zoom out and look at the broader market. Zcash does not move independently. Bitcoin is currently working through a bearish setup, potentially forming a double bottom while also approaching a breakdown from a rising wedge, which is historically a bearish pattern. When Bitcoin loses momentum, altcoins tend to follow, often with more volatility. That broader weakness helps explain why Zcash and many other assets are pulling back at the same time. Even strong setups struggle when macro pressure increases. Because of this structure, a deeper pullback remains a real possibility. One level that stands out clearly is around $210. That area aligns with prior consolidation and would represent a full momentum reset. This does not mean price must reach that exact level. Markets are not precise machines, but based on structure, indicators, and historical behavior, the probability of a larger pullback than most people expect remains elevated. If that scenario plays out, it could happen relatively quickly. A one-week window is not unrealistic if selling pressure accelerates, though nothing in markets is guaranteed. At the same time, flexibility is essential. Markets can invalidate bearish setups just as quickly as they form them. If momentum shifts, key levels reclaim, and structure changes, the bearish case weakens immediately. This is not about being permanently bearish or bullish. It's about responding to what the chart is doing in real time. I will be the first to acknowledge if this analysis is wrong, because disciplined analysis is not about ego, it's about adaptation. Even on the daily chart, the percent trend exhaustion continues to drift lower, reinforcing the idea that the market is still in a reset phase rather than a breakout phase. Whether this resolves into a deeper correction or becomes the foundation for a future rally will depend on how price reacts to the levels we've discussed. For now, patience matters more than prediction. To close this out, Zcash is at a critical inflection point. Failed resistance, bearish momentum, weakening structure, and broader market pressure all suggest that downside risk remains present, even if it doesn't look dramatic yet. At the same time, markets are dynamic and conditions can change quickly. This analysis is strictly educational and not financial advice. Always do your own research and manage risk responsibly. If you found this breakdown helpful, make sure to like the video, subscribe for more clear and structured technical analysis, and let me know your thoughts in the comments. I'll continue.